Ever looked at your crypto portfolio during a dip and thought, that's it, I'm done, I'm selling before it goes to zero? Then a few weeks later, price bounces back and you realize you just sold before the recovery? Yeah, that hurts. But here's the truth. Panic selling isn't a market problem. It's a mindset problem. And once you change it, you solve it, everything changes. Hey, this is Colin. I help beginners cut through all the hype in crypto and build real wealth in crypto with a conviction-based portfolio and simple macro framework that actually works. When I first got into crypto, I can't tell you how many times that I sold way too early just to watch those same coins double and triple in value in price just like a few weeks later. It wasn't that I didn't believe in the crypto. It's just I didn't understand the game that I was playing. So today I'm going to help you stop panic selling once and for all. You'll learn how to stay calm during the market dips, how to understand the larger picture, and how to follow a rule-based system that keeps your emotions out of the driver's seat. And if you want my full step-by-step strategy that shows you exactly how to stay in control and how to build conviction in any market, make sure you grab my Crypto Wealth Playbook. Visit cryptocolin.com or the link down below in the description. Let's get started with why panic selling is emotional and not logical. Let's be honest, panic selling isn't about charts or numbers. It's about fear. Fear of losing money, fear of missing out on the next safe opportunity, fear of being wrong. Here's the truth. Fear and logic can't coexist together. When red candles start stacking, your brain literally switches from logic mode to survival mode. Your body's pumping cortisol, your hands are shaking, and your decision-making collapses. That's why you sell low and regret it later. Let me share something from my early days. Last cycle, I was holding some crypto, I was holding some tokens, and they were down, they weren't moving, it was sideways, it wasn't happening just yet, that was, right? So I got bored, I got tired of waiting around, I didn't think that they were gonna do anything, and so what did I do? I ended up selling them. I sold them off and I moved into another coin, and guess what? Then eventually, those other ones, they end up doing a 5 and then a 10x. I missed out on that because I didn't understand and I sold too early in a dip still. That's when I realized it wasn't my portfolio that was broken. It was my mindset that was broken. So before I talk about strategy, you need to accept this, that volatility in crypto is normal in crypto, especially in crypto. It is huge, extreme volatility in crypto. If you can't handle your portfolio doing a 30% dip, a 50% dip, or even a 60% dip. And yes, even in the bull run, in the bull markets, you're going to see often 30, 40% dips. But if you can't handle a 30% dip in a bull run, in a bull market, or any market for all that matters, right? Then you're not going to be able to handle, you won't be able to receive that 5x, 10x, or a 50x, 100x. Why should you just got to think about this. If it's your mindset. If you can't take a 30% dip, why should you deserve to receive 100% or 100x even, right? Those 100x's, those are going to come to people that can withstand huge volatility in crypto. Panic selling comes when your emotions are out of control and you cannot control your emotions. Winning comes when your strategy and when your plan controls your emotions. So if you have a plan, if you have a strategy, a way you are playing this all out, then that there will control your emotions. Your emotions, you don't need to worry about them. Your emotions, they're under check. They're in control, because if, someone asks, are you worried? What are you going to do? What's the market going to do? What's going to happen? Are we done? Are we still going to go up? Are we going to go down now? When you have a strategy and you know what you're looking at and you understand the markets, you can then just sit back and be like, no, I'm not worried. My emotions are in check. They're in control because I understand what's going on. I put in the time. I research. I understand the market. I understand how things are working, what moves the market, and why things are the way they are. And what I'm holding, I have a strong conviction in. So if it does dip down 30%, 40%, hey, if it dips down 50% or so, I got a strong conviction and I know what I'm holding. In fact, I'll buy more if it does dip down like that. So that's why it's so important to have that strategy and have that plan so that you can control your emotions. Next, number two, we want to zoom out. We want to zoom out and take a look and watch the macro. When you zoom out and you have a look at the macro context, that's what we're doing here now. One of the biggest mistakes that beginners make is they look at crypto, they watch crypto in isolation on a small little scale. Just looking at it in isolation, like every dip means the end of the world. But when you zoom out and you look at the macro, those dips, they just look like little waves in a massive tide. Let me explain. Crypto doesn't move randomly. It follows global liquidity, a global liquidity cycle. We're not on a Bitcoin halving cycle here, right? People look at it that way and they hear, oh, it's like Bitcoin halving that everything revolves around. And, they want to count out so many days. And I've seen this a lot recently, right? Over on like Facebook where people say, nope, we're at the top. In fact, right about now, okay? Right now, as I'm doing this video, it is, it's like the end of October. And, remember last week or so, I was on Facebook and someone's saying, no, the bull run's done. The bull market, the cycle is over. We've reached the top. It's reached the top. It was October 6th that the top was in. And I was like, what? And then so I made a comment. I was like, are you going off of emotions or what are you going on? What gives you that determination to say that it was done? Their response was, well, number one, they made a couple points. One about the fibs, right? And then, I think they got that wrong too, right? But in number one, they did mention they counted out days. And so I think they're just repeating what someone else told them, right? But they counted out like 1,000, blah, blah. I don't remember the exact days, so I'm not going to say it, right? But they counted out all these days. And I'm like, well, what the heck? That's not how you determine what the top is. I know other people have been doing that the past couple of years. Let's count out all these days. On an average, it sort of seems this way, right? But that you can't go by that. That gives you an idea sometimes like, oh, look at this. This kind of worked out this way. But that's not what determines the market cycle is by counting days. And what do you count the days from? The Bitcoin halving. Right. But it's not the Bitcoin halving that determines this whole market cycle. It's liquidity. It's global liquidity. Liquidity into the market pumps. Liquidity leaves the market. Well, the market starts to dump when liquidity leaves. Now we can go on a whole other video, just talking about that. But I do go into it quite a bit more within the, Crypto Wealth Playbook as well, though. But here's how I learned to read the market in context. For example, when the DXY, the dollar index falls, it means that the dollar is weakening. And when the dollar is weakening, well, that means that risk on assets will start to pump. Risk on assets such as crypto. When the feds start to cut rates or pause hikes, liquidity returns. And when liquidity is returning, the markets start to recover. When you start to see Bitcoin dominance rising while altcoins are bleeding, that's rotation, not collapse. So instead of reacting to every red candle, I ask, what's really happening in the bigger picture? If macro conditions are still bullish or neutral, dips are opportunities, not warnings. The pros zoom out. Amateurs freak out. You decide which one you want to be. Next, number 3, create a rule-based exit strategy. You need a rule-based exit plan, not one based out of fear. Here's the real solution. Don't react to emotions. Prepare with rules. Before you buy anything, decide exactly how you're going to respond in any situation. How you respond in different situations really matters. Here's what I personally do. Rule number 1, define risk before buying. I ask myself, how much of my portfolio am I willing to risk on this asset, on this buy, on this crypto, in this project? If I can't stomach seeing a 50% drop in this crypto, then I'm overexposed to this asset. Rule number 2, set pre-planned profit zones. I use my crypto cycle indicators